Hey guys, my name's Milind Sanghavi. I'm the founder and CEO of XWeave. We're a baby that's been launched a few months ago, and essentially we're trying to figure out how to make money movement much more efficient using stablecoins and digital assets. And I'll just turn it over to you and maybe, Kenneth.
Yeah.
For an intro.
Yeah, good afternoon, everyone. My name is Kenneth Chua. I lead BD in Philippine Digital Asset Exchange, or PDAX. We're a licensed digital asset exchange in the Philippines, focusing on, so we have a retail app. We power the crypto widget in GCash, the largest e-wallet in the Philippines. And we have an institutional business focusing on money movement and cross-border remittances, which is a large part of the GDP in the Philippines.
Thanks, Kenneth. So I think today is going to be just more of a conversation around what's going on in the digital asset space. And, Kenneth, wanted to start off first, you and PDAX, as we like to call you in short form, like you guys have been the OGs in the Philippine space, in the digital asset space. Just wanted to kind of get your read for what's the journey been like, where there's been a lot of ups and downs, and so we'd love some of your thoughts around that.
Yeah. So we started around 6 years ago. I joined 3 years ago, and it's really been a big change in the acceptance of crypto, of digital assets, and the development of the different use cases. A few years ago when we were here, when I first came here 2 years ago, like we were talking about cross-border remittances using stablecoins, using digital assets. It was really no one was really paying attention, and all the different cross-border remittance companies were very, very skeptical of that, and were very scared. But this year, coming back, it's totally different, right? All these massive global remittance and payments and cross-border companies have all started adopting and accepting stablecoins or digital assets as a way to move funds, to do settlements, and also to make the final payments to their merchants or to receive payments from their payees. So it's a big change in the industry.
Yeah, I mean, do you want to talk a little bit about the change in the industry from, ranging from crypto to stable to meme coins and the kind of the entire obfuscation that happens there, almost conflation. Obviously, that's a journey that you guys have been on, even in your 3 years. So how's that been, and kind of what do you guys fight against, and how do you work through that?
Yeah, we're active in all the different parts of it, or at least all the legal parts of it. Of course, crypto, Bitcoin, the L1s, L2s, that's a very important part. It really drives the blockchain. It drives the tech behind all of these things. But what we're seeing more and more are different use cases that are being built on that, right? So of course, stable coins, especially for cross-border movements and payments. And then also now more and more real-world assets. So securities, stocks, bonds, funds coming on chain, being tokenized, and then being traded on DEXs and allowing for more fractionalization, more access, more financial inclusion.
No, and I think it is kind of constantly changing, right? Like change is constant kind of concept for sure, which you and I have spent a lot of time talking about. I think, look, one of the things we'd love to get your read, right? Like you're an exchange and a custody provider. Other than the stablecoin heat that's on right now, in general, the way I think of it is you guys are putting shovels in a gold rush. Where do you see that change coming? Do you see change coming? Do you see competition growing up, going less?
Yeah.
Yeah.
One thing that we're noticing, right? I guess initially, personally, when I first joined PDAX, we were exchanging crypto for fiat. And one question that I was always asking myself is, will this become an industry similar to like money changers, where every corner there's an independent mom and pop doing money changing? Right, and at that time, the Philippines, the central bank gave out around 30 different licenses for virtual asset service providers. But in the past 3 years, that really changed. Actually, it went in the opposite direction. Recently, a lot of these licensees have returned their licenses or have, or had to give it up, right? And that's because I think it's becoming a much more scale business. It's becoming a much more fixed cost business. So all the things you need to have in terms of cybersecurity, transaction monitoring, compliance, KYC, plus all the tech behind it, right? It's becoming you need bigger and bigger scale. And I think the good news there is that As we're also getting more scale, it's helping in terms of liquidity, right? Because what we're also doing is we're matching buyers and sellers of digital assets, or funds in the Philippines versus funds abroad, right? And doing that matching. So that's becoming a big scale effect. And ultimately, what we're seeing is that it's also lowering the cost, tightening the spreads in the space.
How do you see the regulation kind of moving specifically for cross-border? Because that's what something we've been talking about. We at XWeave see regulation as a good thing almost, right? Because it brings clarity to who's clean, who's not clean, at a very binary level. Where do you guys see that? And what other markets are you guys seeing other than the Philippines? Because I think the Philippines has been a leader for sure.
Yeah. So I'll speak first about the Philippines because that's what we know a lot of. We're very lucky that we have a regulator that's been very open to digital assets. They created a framework, I think around 5 years back, or even more than 5 years back, right? And they've been very constant, right, in seeing this as a way to catalyze cross-border remittances. It's a major economic driver in the Philippines. So on the one hand, they're very open and they're very open to innovation. But at the same time, we see that it's becoming more and more mainstream, and that we're converging more and more with the traditional compliance, anti-money laundering requirements. One big factor that's coming up, or one big change, is the travel rule is becoming more and more strict, and more of the transactions are being covered by that, right? So, which I think is a good thing. It makes sure that all of these transactions are above board, right? We don't allow any terrorist financing or tainted money, right, to enter into this space.
Yeah, and I think that's the reason we like you guys as a partner is we think arbitrage at the end of the day, runs to zero, right? And it's the wrong way to build a business. I think just talking specifically about our, the use cases as well, like obviously right now, it's a pretty hot season for stablecoins. For a variety of reasons, and I do think it's the coming of stablecoins, and it's been coming for a long time. We've obviously been talking about it for almost a year. Where do you see that going? What do you see as the use cases on stables? Like, what do you see as things that could make those use cases better?
Yeah. I see stablecoins as it's necessary in places where you're bridging two different worlds, right? I think and two examples come to mind. One is in terms of payments, right, where if everything was being paid within a national payment rail, then it's fairly smooth. But the moment you're jumping between different payment rails, you need a bridge currency that's fast, it's cheap, that's instant, right? And stablecoin plays an amazing role there. So of course the work that you're doing with XV, right, taking stablecoins to use to send money from one jurisdiction to the next, right? Onboarding fiat into stablecoins and then offboarding it in the next jurisdiction, then using the local rails to send. I think the other place where that comes into play is where we're bridging, the real world and the metaverse, or the Web3 world. If everything we owned was NFTs, we'd be fine trading in ETH. But we are moving right between, especially with real world assets, where interest is in fiat, right? Then you need to have something that is based in the real world, but has the ability to bridge, right, these two worlds. So I think that's
yeah. We call it Web 2.5 almost, right? Because it's take the advantages of Web 2, take the advantage of Web 3, and kind of blend it together. And I think wanted to get your view. I feel like since we started talking, it was pretty natural for us to go figure out and say it's stables. Like we certainly think that it's either stables or some sort of a digital asset that is regulatory kind of friendly or regulatory approved in some sense. There are different views on that. Wanted to kind of get your sense for what are the different use cases beyond just money movement. We obviously believe, obviously for what we are building together with you, we believe money movement is very natural, as you said. But what else do you see kind of in the stablecoin world?
I guess in terms of the bridging, right, one area that we're very excited about and we see as the stablecoin being absolutely necessary is in the real-world asset space. So at PDAX, we've tokenized digital government bonds, and we're making that available on our platform. Currently, it's tightly coupled with our fiat wallet, so all the interest is paid into the fiat wallet in our e-wallet, right? But in the future, once we allow crypto out and these, these bond tokens are floating in space, floating in the metaverse, we need a way to make those payments, right? And so I think a stablecoin will be absolutely critical. And so I think, yeah, for example, it's important to have a Philippine stablecoin to make those payments. And as more and more of our assets, our investments move into Web3, then there will be more and more use cases for stablecoins, and yeah, more use cases.
Yeah, I mean, I think on that line, right, like, wanted to get your view on everybody's launching a stable based on everyone I've spoken to, at least in the last 2 days. I'm sure you guys have a lot of demand and you're probably getting some investor interest on where do you see that? Where do you see the end point on that? Do you think there is a world of 357 stables and a few win, or do you think there's just going to be a multi-stable kind of world?
It really depends, I think, on how it's both the market and the regulations. I think the big challenge with with stablecoins, right, is the question of like, are these really backed? Is this safe, right? So I think in the sense that if we have as many institutions, it depends on like whether these institutions have the capacity and the ability to ensure that it's backed and that the regulations are there. And then the second thing is whether, and the more stable coins we have, the more it disperses liquidity, right? So that becomes a challenge. So if there's a way by which these can then be easily traded, then we'll have a world where we could have a bit more, but they're all kind of variants of the same thing. But yeah, I think the jury's still out on how that will develop.
Do you think the world ends up with everybody either being a stable or a CBDC that is domestic currency, or do you think we always end up using US dollar? Like, if you were to pick a side?
I think in the long run we'll need different currencies, right? Unless we move to a single world fiat currency, but I don't think that's happening in the short run, right? So, insofar as we will have our assets denominated in our local currencies, there will have to be stables in those currencies. Yeah, and I think that's how it'll probably play out.
I think the thing there, right, like what you and I have also spoken about, is that it's not just about having the stable or a liquid or digital asset. It's the liquidity behind it, and the kind of the way we think of it is what's the utility on the asset, right? So it's not. I don't think personally we're obviously have a different viewpoint. That we believe that the utility that the stable brings, or the utility that behind the digital asset, is probably a lot more important, and therefore the liquidity becomes really, really important in terms of being. And so, like, if you were to look 2 years out, like, how does this liquidity scenario play out, and how do you guys see yourself playing in it, maybe as well?
Yeah, I think the challenge at the moment is that there's still a bit of a mismatch between the buyers and sellers of crypto or of digital assets in general. And so each country tends to become an island. So in our sense, there's only so much crypto that's circulating within the Philippines. And if you need to buy and sell, you'll need to import it or export it out of the country, right? And ultimately that will have to rely on international rails, right? But as more and more people adopt stablecoins, as more and more people use stablecoins, and as more of the flows are using stablecoins, then I think that will effectively improve the liquidity, right? So now more folks are buying crypto, but as more like inbound cross-border remittances, then it matches, right? And that makes the liquidity better, lowers the cost, lowers the spread.
Yeah, I mean, I think that's the really interesting part, is how do you do the net matching, right? So that not just liquidity, but the net matching without going into the liquidity pool, as we've talked about. But look, thank you for your time. Really, really appreciate it, and look forward to partnering together more and more as we go.
Yeah, thank you.
Thanks. See you guys.